everyone knows why that happened. The fixed income space for years did not really offer the yield or the return that many funds like yours needed. You found that in the private markets here. The promise of that at the time and the returns that you're getting now, are they in sync?
I think they are. We've moved up with our credit allocation, so we're certainly looking around for both portfolios we can buy as well as doing one-by-one investments through a team we're looking to build. I think the thing with our private portfolio more broadly is it's performed really well over the last 20, 30 years. So it's well proven to us and our plan.
When you look at new credit opportunities, are there specific pockets that you're finding a little bit more resilient or a little bit more attractive?
Well, the debate we're having is probably to what extent we want to move into sort of more the private equity credit portfolio, because we already have knowledge around managers who operate there as well as our own investment activities. The other one we've been talking to are banks who are probably looking to share some of their portfolios to see whether or not we can do some sort of joint deals where it's actually we can acquire a larger portfolio on attractive terms.
Is private equity, specifically private equity, is this the environment where you would want to increase allocations to that?
Well, I think we'd largely look at private equity to do more credit if we felt that the equity returns didn't look as attractive. We're still finding equity returns on private in equity investments to look interesting. The real challenge there is actually the transaction volumes really come down, mainly because there's not so much leveraged debt available.
Are you anticipating a recession here in North America or globally?
So we're a global investor. North America's been a fabulous market for us. We would probably anticipate a softer recession in Canada and in the US. And we'd probably be anticipating overall a recession worldwide, particularly in Europe. It doesn't mean we stop investing, we just alternate our approach in terms of what we want to buy.
What about diversification? What's the approach there now? What is diversification in this environment?
So for us, we invest in about 50 countries around the world. We have 10 that we've listed as being strategically interesting. And we try to make sure, by and large, we have people on the ground in those 10 countries. It allows us to be able to look across our product range from venture to real estate and find the right product for that particular market.
Is that a bet, though, on the idea that the economic correlations from country to country are a little bit looser today than maybe what they were a few years ago?
I think that's right. And if you look at the volumes that we're investing, you can get overexposed to any one market, both from a geographic, from a political, from an economic point of view. We also try and look at currency and say, does that actually work for us? So some countries are quite interesting from an investment return standpoint, but the currency isn't very favorable once you convert it back to Canadian dollars.
What about the geopolitical situations right now? I mean, both in the developing world, but also in the developed countries too.
You know, it's really tough. I think the geopolitical risks made life much more complicated to be an international investor. You also have some countries where you might say there's more key man risk around one individual as well as the party in power. So you might say from that perspective, India has some key man risk about Modi. What we try to do is work closely with governments to try and understand where they're looking to take the economy next, but also how they see inward investment from foreign capital.
Well, with regards to India, though, so many people have talked about this idea that some of the opportunities that folks saw in China a few years ago, that now those opportunities, at least on a valuation basis, can be found in India, not just because of the population, but in theory, that rising middle class. Are you seeing that? Do you have confidence in that?
Well, I think there's certainly the demand driver based on the growing population, the young population, and there's also a lot of infrastructure opportunities in India for us. I think the question is, back to your comment, is to what extent valuations reflect that, and actually many private equity and public equity valuations in India are still pretty fully priced.
Do you have exposure to China right now? Any direct exposure?
We have nominal exposure, what I would call something that we can run with. We're trying to be careful with how we direct our capital around Asia, certainly at the moment.
And I'm curious, back here in the U.S., your exposure to any of the banks, the regional banks here in the U.S., like SVB, like First Republic?
We've got really no exposure. We take sort of our counterparty risk exposure pretty carefully. And also, you know, it's not probably an entity we would do a lot of business with because we're more into some of the larger banks or some of the larger programs.